Ladies and gentlemen,
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, it's Joanna Oakey here, and welcome back to the Deal Room Podcast, brought to you by our commercial legal practice, Aspect Legal. Today, we have the fabulous Mark Ostryn from Strategic Transactions back again. And today, we're talking about reviewing current trends in buyer motives and also just having a look at the stats about what has been happening in the market. So don't go anywhere. Here we go.
ladies and gentlemen,
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, Mark. Thanks so much for coming back on board.
Thank you for having me back, Joanna. How are you?
I am fabulous. I'm absolutely fabulous. The sun is shining. We're getting towards summer. You know, what else can you ask for?
Absolutely.
All right, let's kick it off. Mark, you're our trends man. How about you tell us what you're seeing in the figures at the moment? How are our valuation multiples trending? What are we seeing out there?
Right, okay. Well, I guess I should start off by telling you something that is always on my mind when I have an encounter with a prospective client that wants to put their business on the market. You know, I'll go into their office and they'll look at me and they'll put their arms together and they'll say, so what's the multiple for this business? How much am I going to sell it for? And in the good old days, you'd have this chart. And this chart would say on the horizontal axis would say size of business, and on the vertical axis it would say industry sector. And you'd go, okay, you're a food manufacturer with a $1 million turnover, therefore you can expect a 3 times multiple of profit. Or if you're a $5 million business, you can expect a 4 times multiple. Or if you're 10 million, it's 5 times. And then if you can go all the way up to being an ASX listed business, and you could be looking at 12 times for a small cap. Doesn't happen anymore. The charts don't exist anymore. The averages have stayed roughly the same, but the variance between different businesses in the same sector has become significantly greater. And there's another cruel fact: most businesses don't sell.
Yeah, right. And so do you have any numbers behind that?
Businesses in health and beauty, technology, and food and beverage, I'm sort of seeing between about 50 to 60%. In the smaller market, we're tending to see that up to sort of 70, 75 businesses close the doors without ever finding a sale and finding themselves simply having to liquidate their assets.
Wow, that's massive numbers. So then tell me, when we're talking about where we're seeing the current sort of pricing of business sales at the moment, are we looking here at 2018 figures? What period are we looking at here?
Okay, well, look, we've combed through all the transactions within various market sectors that have been recorded within 2018, where there's been some form of public announcement. So obviously there's going to be a slight bias towards slightly larger businesses because they're more likely to make an announcement. And we're seeing sort of overall stable valuations. But what we are seeing is we're seeing some spectacular sale prices, and we're also seeing some fairly dismal ones. And we're correlating that with first of all, the amount of competitive tension, the number of buyers that are looking at a particular acquisition, but also what it is that the seller has to offer the buyer. Okay, and that's really, really important. There are also other things like the fact that, the ABS, I was just looking at some ABS statistics this morning. New businesses are coming onto the market at a rate of 5.7% per annum. Exits are only increasing by 0.5%. They've got a bigger population of businesses. You've also got availability of credit, which is getting more and more challenging. And also just the fact that the actual cost of creating a business, a greenfield business, rather than buying an existing one, is getting cheaper.
in terms of the amount of time that it's taking for startup through to turning a profit, or you're talking here, like just the specific, side of, how much you pay for your company registration and your legals and all of that sort of thing?
It's partly that, but the best analogy, sort of keeping it simple, is the fact that if you wanted to sell stuff to, B2C 20 years ago, you'd have to set up a shop. Well, now you set up a website and you have various sophisticated tracking mechanisms on it so that you know who's buying what and when they're buying and why they're buying it and when they're going to need some more. So, that's just one example, but costs of getting into business are much, much lower.
Okay. What is all of your review of the statistics over the last year showing you in terms of what the sorts of multiples are for different types of businesses in types of industries?
We're only tracking 3 specific industries sort of in endpoint, but sort of a low value technology-based business that's advisory could be anything from sort of a multiple of 2 to 3. A food manufacturer, again, depends on the size, can go anything from 2 to 10. I mean, there is a whole chart of statistics that we collate, and I'm actually really, really happy to to provide the statistics to anyone who's involved in the advisory business, actually basically giving their clients some kind of idea about what they can expect for their business. We also have on my website, we also have something called Quick Value, where a business owner can answer 15 questions on their business, and it's all confidential, free of charge, and it'll actually spit out a value for them.
Wow. Okay, so if someone wants to take you up on that, Mark, do they head over to your website? What is your website? And we'll put a link through in our show notes, obviously, for people who are out there running.
Yeah, it's strategictransactions.com.au, and then they'll just click on food or technology or health and beauty. It took me 9 minutes, and then you'll get a fully confidential figure back to you. And that figure has been based on thousands of transactions, but it's also looking at all the different uniquenesses of your own business and trying to work out how future-proof it is, how scalable it is, and all the different considerations that an owner has to bear in mind.
Okay, great. So talking about so you talked about technology advisory that you've seen in the last year, multiples of around about 2 to 3, food manufacturing businesses 2 to 10. I mean, 2 to 10, that's quite a broad range, right?
It depends on the size of business. I can actually plot some kind of correlation between how strong a seller's assets are, how strong the buyer motivations are, and the actual sale value.
And sorry, when you say how strong the buyer motivation is, what do you mean by that?
Let's just look at this in terms of a simple formula. The first part of the formula is how strong the seller's assets are. So you look at the main assets of a business. You say, the relevance of their product, the quality of their people, how competitive the business is and how competitive it will be in 5 years' time, how well their systems are developed, the level of intellectual property within the business, the financial management of the business, and brand recognition of the business. So that's the first pool of assets for the business. And obviously, the stronger they are, the more valuable the business is. So that's the first part of the equation. Now, the second part of the equation is, well, what are going to be the motives of the buyer? Okay, what is the buyer looking for? Because the buyer's going to make a decision which basically says they're either going to buy a business or they're going to build a business themselves or build a division themselves. So they're weighing up between the two.
Maybe if you could give us an example of, say, for example, in our food manufacturing, where we've got this quite large range between a multiple of 2 and multiple of 10 at the high end. What does a lower end, like a multiple of 2, look like in the, do you have a case or an example there of what these types of businesses look like that are at the lower end of the multiple?
Smaller business products that can easily be recreated by themselves anyway. Maybe I'll sort of break this up by giving you a bit of an example. I was working on the buy side for a large food manufacturer, and the customer, the small food manufacturer that they eventually bought, had spent millions of dollars over the previous year or two installing a new factory and putting in new production equipment within that factory. And the buyer, although they wanted the business and although they wanted the brand and although they wanted the products from the selling company, they didn't want the factory. So the seller had unfortunately invested all of this time and money into setting up these systems that weren't valued by the buyer. It's a sad but excellent example of the fact that when a seller is thinking of selling, they have to think to themselves, first of all, even before they think, well, how do we make our business better, is what does a buyer want?
Yeah, that's such a good example. We can all identify, I think, sitting here in the listening audience, that would have cost a bucket load of cash.
Look, unfortunately, yes. And it was a family business, which is sadder.
I guess in one sense, it's sort of easy to say, well, in hindsight, crap, no one really wanted what they thought was going to be wanted out in the market. How do we turn that really practical? How do we work out what a buyer is most likely to want?
Here's what I do. One of the first encounters I have with my clients is we will sit down and we will create a long buyer list. And let's just think what businesses, what larger businesses, hopefully strategic buyers within your segment would be interested in the following. And I'll say to them, which business in your segment, may not necessarily be in this country even, would be interested in geographically expanding into Australia? And so we'll do a bit of a brainstorm on, who's outside the country and may want to move in, or who's interstate and may want to go into New South Wales, or something like that. So where are the motives going to be for international expansion, firstly? Secondly, what businesses could you consolidate with in order to achieve some kind of synergies, some kind of economies of scale? Thirdly, what businesses would value your intellectual property? And that can be not just your patents and trademarks and those sorts of things. It can be, your customer databases, your methods, your processes. What businesses would see your products and want to acquire those products in order to expand their own product range, or in order to diversify their own product range, perhaps take it into new segments or new channels or something like that? What businesses want your clients? Because your clients may also potentially be their clients, particularly in the tech space. What businesses want to hire your key people and probably put them in golden handcuffs? What businesses may want to buy your business in order to be defensive and reduce the amount of competitors in the market, thereby perhaps enabling market strengthening? What businesses may want to increase or obtain market share? So by the time I've finished with the clients and we've gone through all these different things, we can say, okay, well, there's 20 or 30 businesses. Let's just think about what they want, and let's just think about how we can restructure, re-engineer your business so it's going to be appealing to them.
That sounds like a really solid approach. And so how, I guess this is a bit of a leading question. I was going to say, how long before a sale should business owners think about this? But I guess the reality for all of us from an advising perspective is we just say as soon as possible before a sale, because the longer we have, the longer lead time, the more changes that we can make to the business to make it more saleable. But do you have sort of a magic figure in mind that was a minimum?
You're gonna hate this response, Joanna. It's the response of a pedant. It's a very unhelpful response, I'm afraid, but I'll give it to you anyway. The most famous book that's ever been written on exit planning is a book by John Warrilow in the States, and it's called Built to Sell. And Built to Sell basically implies that even when you are architecting a business, even when you are thinking about what products, services, niches you're going to attack, you're doing that partly on the basis that you can generate positive cash flow, but also partly at the end of this process, there's a rainbow, and the rainbow is a payout. So you're really thinking, strictly speaking, you're really thinking about exiting while you're actually growing your business, rather than saying, okay, well, I've got to exit now. Who do I sell it to? Now, that's incredibly unhelpful to you.
Because, I tell you what, and I completely agree with you. And I have this discussion often. And the thinking many times round is the day you start your business is the day you should be preparing for its exit as well. But the reality is that building a business is a lot of freaking hard work sometimes, right? And sometimes the skills that it takes to grow a business are very different to those skills that will give someone the best ability to work out an exit as well. So there's a skills difference, I think, but also there's almost an energetic difference. I just see business owners who are really focused on the growth of their business just can't get their headspace into thinking about their exit. On the flip side, when some business owners start thinking about exit, suddenly they're out the door already. They find it very hard to distance themselves from the concept of thinking about an exit and the emotion of the exit. And they just start thinking about it, and then that's it. They're off on that beach in Tahiti somewhere.
Absolutely.
In their mind. And now it's drudgery trying to work through their business. So do you have your thoughts around that?
I've started doing some work with a technology advisory business that actually helps startups exit, because sometimes an innovative entrepreneur wants to leave the business as soon as they've got it to a certain point and before they actually commercialize it, on the basis that they get more pleasure out of being a serial entrepreneur or a serial developer rather than actually worrying about, HR issues or occupational health and safety issues and that kind of thing. But the one thing I would do for all businesses, I'd start with a bit of theory. And there's a beautiful bit of theory. It's called Porter's Five Forces model. It can be Googled, and you can sit down with your own model in your office. And it basically asks you a series of questions about where the business is going over the next 5 years. Where's the market going in the next 5 years? Who can come into the business? What competitors can come into the business? What are the barriers to entry? What substitutes can be built which could potentially make you redundant? How will the market size or share shift? What are customers going to be wanting for? How does supply side issues change? What's going to happen with legislation, with legal issues? There's a whole bunch of things. And so if you're sitting down there and you're working out and you're asking yourself proactively all those questions, you're planning how to build your business. But at the same time, if you've got it right, then you're actually going to have people that want to buy your business. You can blend the two exercises with one. But even if you haven't done that exercise and you've got a business now that's a mature business and you want to sell it, you can still say, okay, what do I need to do to make sure that this business remains relevant for a new owner? And that could be something like offering extension services, subscriptions, annuities, all those sorts of factors. And I've got a list of about 150 of them, another checklist that I work through with my clients, where we say, well, what are these things are going to attract buyers to the table? Because what we're going to do is we're going to look at these factors and we're going to put them into a financial model. And we're going to build that financial model out and work out the value of the business based on the annuities coming from future anticipated profits.
And so have you got an example of any clients that you've worked with or any businesses that you've seen that have gone through a process like this and, come up with some really good results out of it?
Yes, look, I'm working with a business at the moment, again, in the food industry, and their revenue sources were stable. They were specifically in the vegetable market, in the greens market. But they decided that they needed to become innovative in certain areas. And so they looked around and said, okay, well, what can we do that has where we can blend our capabilities, because we've got certain core capabilities specifically with research and development within I forget the word actually, within hydroponics, that's it. And how can we expand our knowledge of hydroponics and look in new markets? And they've come across bush foods. And typically bush foods are foods that were typically gathered. They weren't sort of produced on a sort of a massive scale, but they saw that there was the potential there. They saw the fact that some of these flavors were slowly creeping into both Australian overseas culinary experiences. And they were saying there is a market for this. There is a quite a substantial market for this, but that market is blue sky. And under the banner of a food company or a business that has more marketing strength, more money to put behind it, there is much, much more potential for them to grow that blue sky.
And so what impact have they sold yet? Or there's
No.
No. Okay. All right. What impact do you think that will have on sale when they get there?
I think it will have a substantial impact, but there does need to be proof of concept. And so in that particular company's instance, we're going to want to see a 6 to 12 month take up amongst prospective buyers of food, chefs, markets, those sorts of things. We're going to want to see that. We're also going to want to see a fair degree of PR and a fair degree of visible customer interest. How it could be the next wheat germ or something like that.
Yeah. Okay. All right. Fabulous. So then, looking back, can we step back into the trends?
Absolutely. Yeah.
So we've talked about technology advisory, and what do you mean by technology advisory? What's the type of businesses that you're including in this category?
The businesses that I look after are specific to three sectors: technology, food, and health and beauty, all of which are undergoing very, very substantial shifts at the moment.
Yeah. And sorry, when you say technology, my mistake, I thought you said before technology advisory, but technology itself, as in, software companies, is that what you like? Is there a particular focus in these stats that you're pulling out of the type of technology business?
No, I mean, really, it could be anything from if you're looking at IT sales this year, it could be, a group of information security consultants, or it could be somebody that sells product or something like that. And when I refer to technology, I'm using it in a generic sense, simply as tools that people use in order to basically make business more efficient.
Yeah. Got it. Okay. All right, cool. So we've got the technology, the food manufacturing, the health and beauty. I don't think we talked about what the multiples are there. So what's health and beauty looking like?
There are so many subsets of health and beauty. They range from, medical practices to skincare to anti-aging to cosmetics or something like that. And I think I'd probably have to fill your screen with an enormous spreadsheet to try to answer that question, because the answer, I'm afraid, is it depends.
Yeah. Okay. All right. So what else are you drawing out of these statistics? And obviously you've gone through a lot of data there. I find data and the analysis of, these sorts of things really can be incredibly insightful, both in terms of where are we now in comparison to where we were before and where do we see ourselves in the future, but also in terms of the difference between industry focuses. So what are the statistics that you've reviewed telling you?
A number of things. The first is competitive tension gets the highest value businesses. If there's more than one bidder, the value of a business will tend to skyrocket.
Yeah. Do you have any of the stats behind that one? Do you have stats in terms of sort of the, single buyer sale versus the competitive tension sale?
Really tough, because you won't know in private transactions the extent to which that's the case unless you're having an informal conversation with the business owner. And I have had a number of those, because I've got a book coming out early next year where I'm actually looking at biomotive. So from the private side of things, it's very much hearsay, whereas where you see with public transactions, you'll tend to see that there may be several bidders. So you can see there the impact of the sort of the bid there.
Yeah. Okay. All right. And what else are the stats showing you?
I was hoping the stats were going to show greater globalization of acquisitions, but I'm seeing basis pretty stable at the moment. I don't know whether that's because of what's happened in the Trump era. We're all becoming a wee bit more fearful or something like that. But I'm seeing things stable, specifically with the States, specifically with Europe. Maybe that's Brexit. But I'm seeing an enormous growth in Asian interest, particularly coming from China, and particularly coming in the food industry, where we've got a rapid urbanization and increase in the number of middle-class Chinese consumers that basically want to buy from a quality source of food product. I think it's described as a gourmet deli rather than a bread basket.
I like that.
That's the terminology there. The other thing I'm still seeing as very, very interesting is the fact that the number as a proportion of acquisitions that are made by public companies of private companies is increasing.
Yeah.
Okay, now that could be because the public companies have got lazy balance sheets and they're looking at sort of low-risk acquisitions. But I'm seeing that the very, very best private companies, well-run private companies, are increasingly being acquired by public companies, often at higher multiples.
Yeah, I think that's a really good, it's an interesting observation from the statistics. It's something anecdotally, I would say, I'm seeing quite a bit of, and you just can't argue with the fact that your listed companies are a great buy quite often. They can be a pain in the butt, but quite often they pay very well. So
yes, absolutely, yes. There's an arbitrage process in there, which is too complex to go into at the moment. But basically, an acquisition of a private business at a multiple lower than the PE ratio that they're trading in basically is something called value accretive for them.
Yeah. And one thing I'm actually interested in drilling into in these stats is, are you seeing any changes in 2018 from the position that we've been in previous years? So are there any sort of trends that you're seeing changing over time?
Nothing really significant other than the ones I've really talked through. I mean, of course, I'm noticing things like, for example, I operate across food and health, and I'm noticing that there's a merger between good food, organic, or something with health benefits, and health-based solutions. So there's a sort of a product synergy going in there. There's also a growth in the number of SaaS, software as a service type solutions that are selling for higher multiples. And the other thing in terms of the transaction is that there is a lot more transactions that don't finish in terms of owner responsibility when their business is sold. There is a lot more times where the owner is required to stay on, earn some form of earn-out. That's probably what you see. I guess you're sort of negotiating all the time, earn-out structures and those sorts of things. Are you sort of seeing an increase in the number of earn-outs that buyers are demanding?
You know what? We're actually not seeing an increase. I'm not seeing a decrease. For us, it's been, what we're seeing is fairly stable, so fairly consistent with what we've seen over the past. It doesn't surprise me that you're saying the stats are showing that, and I find it really interesting. Obviously, there's lots of drivers behind that, yeah, but just anecdotally. Certainly we see a lot of it, but not necessarily more than in the past.
Okay, that's interesting.
Yeah. Well, this is why it's useful to get a feeling on stats as a whole, because I guess, we're just dealing in our little microcosm here. So that's why I like to hear about what's going on across the board. Fabulous. Well, are there any other parting comments, Mark, on anything else you've seen in the stats or the concept of buyer motives for successful transactions?
The other thing that owners often ask me is they say, well, it's all well and good doing this long buyer list, but once we've done this long buyer list, I'm a year or two away from making this transaction. What do I do in the meantime? But we'll often actually work to think about, well, how do we get in touch with a buyer without the buyer actually knowing that the business is for sale or the business could potentially be for sale? And so a lot of the work that we do actually involves the beauty of planned serendipity, where at certain meetings or conferences or something like that, the seller may have the opportunity accidentally to come across the buyer, maybe have some conversations with the buyer about the potential for certain alliances, potential partnerships in order to sort of strengthen the various product sets of the two. So even though you're going through this cycle, it's still very, very important to engage the buyer or the potential buyer at sort of at an early point, just to really make sure that the seller's impression about where they're going with the business is how the market perceives the value of that business as well.
That's a really good idea. I like that. Planned serendipity. Is that we might have to make that a tweetable.
Okay, thank you for that.
Planned serendipity. I love it.
Yeah, absolutely. Yes.
Fabulous. Well, look, thank you so much, Mark, for coming on to talk to us today about the trends in the statistic. And I guess, we also got to drill into buyer motives as well. So great episode. Thanks for coming to talk to us. Hopefully we'll have you back again soon, Mark, maybe to talk a bit more about this tech side, the technology businesses. I think a keen interest to many of our listeners. I've actually had lots of listeners contact me that have tech businesses as well. So it's quite interesting. I know that there's a few out there listening to this. So maybe if we can come back on another episode, drill into what the trends are looking like in relation to these businesses, and then, drill into some elements further there, Mark.
Look, I'd love to come back and talk you through. I mean, there's basically 7 key assets that we believe that business owners need to strengthen before they go to the market, and that can be the product, the people, competitive, the systems, the IP, the financial, and the brand. And I'd love to go through each of those with you and with the advisors and sellers that are looking into it and say, well, where do we need to strengthen our business prior to sale?
Yeah. Fabulous. Well, look, thanks, Mark. We'll talk to you again soon. But until then, have a fabulous day. And thanks for coming on the Deal Room podcast.
And thanks for having me, Joanna. Lovely to talk to you. You take care.
You too. Aspect Legal has a number of great services that help businesses prepare for a sale or acquisition, to help them prepare in advance and to get transaction ready. We've also got a range of services to help guide businesses through the sale and acquisitions process. We work with clients both big and small and have different types of services depending on size and complexity. We provide a free consultation to discuss your proposed sale or acquisition. So see our show notes on how to book a time to speak with us, or head over to our website at aspectlegal.com.au.
Ladies and gentlemen.
That will conclude this evening's entertainment.
Thanks for listening to the Deal Room podcast. To find out more about this episode and other episodes in the series, check out the show notes or head over to our website at thedealroompodcast.com.au.